Market set to rally this morning as the big short squeeze may be underway as the dollar shows some weakness. That's coming up on 3 Minutes on Markets and Money. One of the big reasons why the markets have been under so much pressure as of late has been due to the surge in the dollar. And what happens with all commodities, asset prices, etc., is they are confined by technical measures over time. Prices can only move so far in one direction before eventually they will revert back to their moving average or below that. This chart of the dollar shows that very clearly, is that whenever the dollar has really gotten extended from the 50-day moving average, it regularly reverts back to that 50-day moving average. This recent surge has been exceptionally strong, big deviation from the 50-day moving average. So seeing this dollar correct back towards the 50-day won't be surprising. That should be a boost to risk assets. So we should see stocks perform better, bonds should perform better, Bitcoin, those type of issues. Anything that's a risk on asset should perform better with a decline in the dollar, including energy prices and oil prices in particular. Again, dollar very overbought here, is a good setup here for a reflexive rally in the markets. Today's blog post on the website, realinvestmentadvice.com, is called The Big Short Squeeze, and this is because markets are now extremely oversold. So again, just like that big dollar rally has got the dollar extremely overbought, the big sell-off in this market has also gotten the market very oversold. 3 standard deviations below the 50-day moving average, very oversold on the MACD, as well as both of our indicators. The relative strength index also at levels that typically marks a bottom. Very negative sentiment, both professional investors as well as retail investors, extremely bearish on the markets. This is all a great setup for a reflexive rally. In fact, this is exactly what we saw here back in June. We had exactly that same type of setup. Market did kind of stutter off on a rally. That wouldn't be surprising here either. There's a lot of trap longs with people who have gotten sold off in this market. They were jumping into the markets here as markets were rising back towards that 200-day moving average. Jim Cramer, others all very bullish. The bottom's in, buy stocks. Well, that turned out to be terrible advice. Now with them trapped on the long side, it won't be surprising to see this market kind of stutter a bit as those longs try to exit the markets, but then that we get some type of rally kind of follow through over the course of the next couple of weeks, particularly because we have so many people kind of offsides this market. So as we've talked about here recently and in today's article called The Big Short Squeeze, use this rally for an opportunity to reduce risk. There is a potential rally here up to about 4,000 on the S&P, but because of what's happening with the dollar, with the Fed hiking rates, the risk of something breaking in the market has really become much more elevated. So again, use this rally, reduce the risk, and we'll keep a watch on it for you. That's 3 Minutes on Markets and Money. See you back here tomorrow.